All right, hello everyone. It's been a minute, but um, been a lot going on, and there's never a better time than now because I think it's perfect timing, and just to point out what the bigger picture is starting to show us this summer in the overall markets. And I'm going to start off by taking a look at the S&P 500. Today is July the 27th. We have about 3 trading days left in a month. Once we get back to next week. We have Monday, Tuesday, and Wednesday. Wednesday is the 31st. So we got 3 days left in this trading month. And this is what the S&P is starting to show us and starting to shape out. I think we are right at a point where we can honestly say that the markets have possibly run into a ceiling. It's a huge possible chance that we have market could be in a point where it hit a ceiling, and we could start to see some sideways action, and then eventually, well, not even sideways, we start to see some downturn now. So markets gave us some warning that in this past couple of weeks that we at a possible point of reversal, major reversal possibly. So let's take a look at that. Here's a monthly chart of the SPY of the S&P 500, and I want to point out right away that looking at this monthly chart, you see this red candle here? That's the month that we're trading in now. That's the month of July. Okay, you got this little short, tiny body and this long wick already. We got as high as 56.69, and now price action is trading at 54.91. I mean 54.59. That's a difference of about $200, folks. A little bit over $200, about 210. In order for the bulls to really take back full control and get this reversal candle. That's exactly what this looks like, a reversal candle out the way. So they got 3 days to make up this ground and get well back above 56.69 in order for the bulls to look like they're ready to continue this run. But there's a lot of ground to make up within 3 days, and I don't think the bulls are going to be able to do so. Then on top of that, look at the RSI. Look how much it overbought territory it is, monthly chart. So with that said, I think we're going to start to see the markets continue to struggle. I think all rallies are going to be met with some fierce resistance, and lower lows are going to start to form. So let's look at the monthly chart of the S&P. Just like we are have hit a ceiling, and like we are starting to go back in the other direction. All right, sticking with S&P, let's just break it down. Look at a weekly chart. Break it on down, and here's a weekly chart. Okay, as you can see, is that ceiling 56.69 and the stair step down. Hit that what's this? Hit a Fibonacci retracement point right at 30, which is 38% fib level. Got a little bounce. See the little bounce with the little wick there. Got a little bounce up, but did not take out the previous week's high. Starting to see a dark blue bar forming and the TTM squeeze. And we're starting to see variance percentage starting to come out of the overbought territory. Also, stochastic is starting to come out of overbought territory. RSI out of the overbought territory. So all signs are still pointing to lower prices on the bigger picture. All right, taking a look at a quick look at the daily chart. Now in the near term, it does look like we could see a little bit of a bounce. And I think this is going to be where it's going to start to trap a lot of the bulls. A lot of bulls are going to get trapped thinking this market is going to see a huge rally. But look at all the damage that was done in this past week. So we're not surprise me to see a continuation of a relief rally. Started a little bit on today. Any intraday moves, I think it's going to be met with some fierce resistance. So you see this little green candle here. You see we in overbought territory, looking at the wins percentage. I mean, oversold territory, looking at the wins percentage. Full stochastics and the RSI. So we could see a continuation, but look at the 20 per moving average right here. That's where some resistance is. And look at the 50 per moving average. We've been battling with it right here. So I think we can get a little continuation or a little bounce. Right, first couple hours of next week, maybe the first day, but I think it's going to be met with some fierce resistance somewhere up here and may start that next leg down. So don't fall in love with the rally if you see markets bust open in a big way on Monday morning, and it could maybe met with a fierce reverse even on Monday, or it could hold those levels and reverse on Tuesday or beginning of the week. But I think by the end of next week, you could see price action fall below this 50 per moving average and stay below it. So that's something to pay close attention to as we go through the trading week next week. So if we go in reverse, look at the Dow Jones. See what looks like a nice bounce off of a level of support. But look at the TTM squeeze. So like the momentum is getting weaker and weaker and weaker. See signs of a reversal on this daily chart and wins percentage, possibly even a near-term buy signal on SOFR stochastics and an up move in the RSI. But I do think any near-term move is going to be met with some fierce resistance. So if you look at the daily chart on this Dow Jones, got as high as 41,376. It has a lot of ground to make up. Can say markets have a lot of ground to make up in 3 days to prove that it can continue a nice bull run in August. But I think August is going to be a fierce month that's going to be met with some fierce resistance for the bulls. Here's the weekly chart. Weekly chart looks a little different. Looks like we're showing a topping pattern in the weekly chart of the Dow Jones. See this high the previous week? Got up to 41.36, and then this week right here, look at these long wicks. It looks like we are trying to establish direction. So I think these two candles right here is going to represent pretty much the topping pattern. It's like we could be reversing from this area. Look at the RSI overbought territory. And here's the monthly chart. Look at RSI. It's definitely an overbought territory. Past 3 months, look at that. Look at the volume. It's starting to come down as price action was going up. And here's even a quarterly chart. And look at the TTM squeeze. We're just on a nice little rise, but it looks like we are running into an area of concern. Overbought on the RSI as well. So folks, it does look like there is some trouble brewing in the water for the overall markets longer term. The bigger picture. All right, and my screen picked a good time to freeze on me. So let's see if we can look at the NASDAQ real quick, see if that'll pop up. Bear with me, folks. It's a good thing I might have multiple screens. All right, so let's see, did we come back yet? Yep, we did. Okay. All right, so let's go back to the NASDAQ. NASDAQ composite. All right. Here's a monthly chart of NASDAQ. And look at that. Look at the July monthly candle. Look how we got up to as high as 18,671. Then we're at 17,357 with a long wick above the body. Got 3 days to make up that ground in order to get back to that high. And I think if we don't see that, we could continue to see lower prices as we go into August. Again, look at the full stochastic starting to show some type of a sell signal on a weekly chart, on this monthly chart. I'm sorry, on this monthly chart. Look at our the Williams percentage starting to come out of the overbought territory on this monthly chart. And look at full stochastic. I'm sorry. Look at the RSI in overbought territory, but like it's starting to bend downward, like it's ready to come out of its overbought territory. That's what the monthly chart shows us on the NASDAQ composite. Here's a weekly chart. Look at that, 2 red weeks in a row, folks. After we hit a high 1867, 18,671, have not been able to get back to that. Every rally has been met with fierce resistance. Each month is a stair step down now. I mean, each week has been a stair step down. With TTM squeeze starting to show weakness in the trend, in the upward trend. And look at the Williams percentage pointing downward. Full stochastic starting to trend downward. RSI definitely trending downward. And here's our daily chart. Again, we had a lot of fierce selling on this past week, right at a level of support. So could we see a little rally beginning of the week? That is true, but I think it's going to be met somewhere in the week with some type of resistance. So we could rally back up to this 50 per moving average. Yep. 50 per simple EMA, 50 per moving average, sorry, simple moving average, back into about 17,538, maybe even a little higher. But I think anywhere around here, you're going to start to see price actually be met with some fierce resistance to really rally back up in a major way. All right, so I do think we can see a little bounce, but I think any bounce is going to be met with some type of fierce resistance at some point during the week next week. So that's something to really pay close attention, folks. Again, I think we are at a level, bigger picture, that we can continue to see prices start to go lower and create lower highs and lower lows in the overall markets. Let's look at the Russell real quick. All right, here's a daily chart on the Russell. Look at that little gap up on the daily chart. See that little gap up here? 9 times out of 10 we see gaps like that. 9 times out of 10 gaps fill. So I think we're going to see a reversal in Russell eventually, and we're going to fill this gap. That's on the daily chart. Let's look at our weekly chart on the Russell. It shows some strong momentum on the weekly chart. But look at the RSI. It's also an overbought territory. While the small caps do show strength, I do think the small caps are going to, I think they're the strongest out of them all, but I still think eventually, somewhere around here, they're going to start to show, if the overall market start to reverse, I think we'll start to see a reversal in small caps at some point or another. Small caps is the one I believe that it's been running up, trying to reach its all-time high, but I don't think it's going to get there just yet. I think we could get there eventually, but I don't think it's going to happen just yet. Although I do think, again, with small caps, I think it has the it has more of an ability to hold some of its levels of support. So right now we are definitely in near-term overbought territory on the small caps. See the weekly chart shows an RSI reading of about 78. So we definitely in overbought territory in the near term. So I do think we could see even the small cap start to pull back just a little here. You see this daily chart, this gap up. So I do think small caps are going to start to see near term pullback to possibly close this gap up here we see here. All right, now with that said, let's take a look at the VIX, because the VIX is also starting to tell us a story. Near term, look at the VIX. Look at that big move the VIX did on this past week. It's really shows a tremendous move on this past week with these move ups, running into resistance right now, right around 18. I think the 18 is a reversal sign for the VIX near term. So if we see reversal in the VIX, that means we'll see a move, a temporary up move in the S&P overall markets. But look at a longer term chart. Look at this big candle. Look at this, and this looks like a sign of a continuation to the upside to me. This big candle that we've seen this past week is a wick, almost even wick on both sides with the small body in the center. That to me, folks, looks like a possible warning sign that we could still continue to see higher prices in the VIX longer term. Right now, it does show some type of reversal, so we could see the VIX go back down below 16, maybe it's down to 15. But look at a monthly chart on the VIX. One thing I'll quickly point out here on a monthly chart of this VIX is, look at the Williams percentage. Every time it had a rally before, this is some area. This is a level that VIX could not get there's some levels in the Williams percentage that we could not get beyond. But look now, look where we at now. We are well above that level. I had a drawing tool. Let's see. Let me extend this. All right, I'm trying to make a point here that the oscillators in the Williams percentage has gotten well above previous levels where we saw a reversal of the Williams percentage going back down. We got above that level, so it created a higher high in the oscillators and Williams percentage, the VIX on this monthly chart, leading me to believe that the VIX will see higher prices in the near future on a bigger screen. So I think any pullback in the VIX is probably going to be any bears to try to take the VIX down is going to be met with some fierce buying pressure. We're going to start to see the VIX possibly continue its way higher over the long span. So that's something to keep in mind. Unless the VIX can find a way to drop well back below 13, it's going to that could be signs that the market is see how we went down as low as 1062 back here about a month ago. Then we got a big reversal from that area. So if the VIX can't find a way to get back well below 13 bucks, folks, this is a sign that we could start to see the selling pressure in the world market continue to ramp up over the next couple of weeks, maybe even the next couple of months. So it's something to pay close attention to, that the VIX look like it's on a launching pad. Looking at this bigger picture again, there's a monthly chart again. Look at the stochastics just starting to show on a monthly chart. VIX is coming out of oversold territory, starting to show a buy signal. Look at the RSI is turning up on a monthly chart. Williams percentage again told you how it's turning up. So, folks, I think the next couple of months could be, we could see some brutality in the overall market, folks. So that's something just to keep in mind, that we are close to some highs in the market that could be met with some fierce resistance, close to some pivot points in the overall market. All right. One last thing before I get out of here, let's take a look at gold real quick. Because while I do think gold, we still can see higher prices, I do think gold is also at a near-term high, at a near-term top, near-term high. So we can start to see some reversal in the gold and silver market. Look at the, this is a monthly chart of gold, RSI reading of about 82. It looks like we got closer to 2,500, haven't really broken above it yet. And we could start to see gold start to struggle up here. It's been in overbought territory on a monthly for quite a bit. And here is this range that we've been struggling, that we've been pretty much bouncing around in. So we could see prices pull back here in gold, maybe in a significant way. We could see if we break below this 50-period moving average right here on the weekly, we could see some fear selling in gold as well. But I think eventually it'll find some support for the next leg higher. But it may take some time for that to play out. So keep that in mind. Still think we see high prices in gold eventually, but I do think it is near an area of resistance that could be met with some selling pressure. But I still think longer term, I think gold is in a nice place where we could see even higher prices. Here's a quarterly chart. Shows you how much we've been on the run. Look at that. 1, 2, 3, 4 green quarters in a row. Could we be due for a red quarter? That's a possibility. We gotta wait and see how this pans out on gold. So again, it could see some pullback in gold. That's a possibility. Here's a look at silver. And silver pretty much shows you how it pretty much hit a ceiling right here, up to 78.6% Fibonacci retracement level. Hit that ceiling, and look, that long wick on the previous quarter, shorter wick right now in the quarter that we're in now. And look at the silver prices right there. It's showing you that it's definitely on the weekly chart. It's been hit this level up here at around this $32 level and start to pull back, drop below previous level support right around the $29 level. We dropped below that level, and we have not retaken it this week. So I do think silver prices could see more downward pressure. I think eventually we could pull all the way back down to 24. That's a possibility. I think this, we could see major pullback in everything in pretty much in the markets, and even silver and gold. I do think once silver gets back around this anywhere around $24 level, if we hit that level before the end of this year, I think that's where we can start to see it start to hold support. All right, folks, hopefully this is information that you can use. I do want to look at one particular stock in general that could be a huge, massive short or put, whatever. I think Tesla has some troubles in the water of Tesla. This is a weekly chart of Tesla. And I'm going to draw this trend line on this weekly chart. I think back in July of 2023, we hit this level up here around 300. I don't think we're going to get back to the level anytime soon. I think we just hit another reversal point, major reversal point, and we got up to around 273, and we started to reverse from that point. And this is a weekly chart. Weekly chart met with some fierce resistance up around here. Weekly chart, we already broke back below the 200-day moving average, trying to hold the 50-period moving average right around 211. Folks, I think we drop below 211. You're going to quickly see Tesla reverse, maybe even drop well below 200, maybe around 290. I mean, around 190. That's what I see that we can see that could be in Tesla's near-term future. Between now and August, we could see Tesla way back down to 190. That's what I honestly believe. I think any rally is going to be met with some selling pressure. Here's a daily chart. Look at how we broke the low. You just stair stepping down. Look at this, pretty much bear leg, bear flag. Drop back below here, and pretty much trading in this range right here, in this little box with the 50% moving average over top. I think that we're gonna start to see this 50% moving average start to turn downward. And every time Tesla try to attempt to rise back up towards the 50, I think the 50 is gonna keep it compressed. So I would say if you looking for a continuation of a bull market in Tesla, I think you may be in for maybe in for a rude awakening. Here's the weekly chart again. I think we're gonna break this 50% moving average in the near future. So that level below 211, I think it's gonna happen in the near future. If not next week, the following week, but I do think, look at the daily chart again, I think there is fierce resistance right at this 50% moving average. I think we're going to start to see it curl down. So any movement up in Tesla, hit that 50% moving average, I think it's going to continue to go down. All right. Oh, one more to take a look at. Let's look at the darling that everybody loves, NVIDIA. You can see the selling pressure on NVIDIA as well. This is a daily chart. Look, every time it dropped below the 50% moving average at one point on the daily. Look at it. Every time it hit it, try to go back up, it's met with selling pressure. Now we hit this 20% moving average. Now we drop below the 50. So that 50% moving average is going to more than likely act as a level of resistance. Look at a weekly chart. Just starting to fall. And it's hovering just above this 50% moving average, which is right around 105, I would say. So I do think we're going in the near term, we can see NVIDIA even below 105 and below its 50% moving average on the weekly chart. So folks, you can see there is some kinks in the armor. There is some holes that are starting to in the floor that are starting to break through. All right. All right, folks, hopefully this information you guys can use. A little longer video than I normally do, but I haven't been here for a couple of weeks or so. So I wanted to make sure I get this in here to show you guys that there's warning flags that are starting to emerge in overall markets in the near term. All right. Till the next time, Tim Davis signing off. Enjoy your weekend and enjoy the rest of the trading month and next week.